Welcome back to the Pro Ticker Podcast, your Thursday morning edition covering major financial magazine headlines, everyone. We're diving into a whirlwind of financial news from January 29th and 30th, 2025. And trust me, it's a wild ride. We've got a tragic plane crash with potential economic ripples, market tremors from the Fed and ECB's latest moves, a record-breaking act of philanthropy, and even some billionaire drama unfolding.
It's fascinating how these seemingly disparate events actually weave together a tapestry of the current financial landscape, highlighting both the anxieties and the opportunities swirling around us.
Absolutely. So let's unpack this, starting with the heartbreaking news that dominated headlines. The American Airlines crash at Reagan National Airport. The Associated Press had extensive coverage on this.
It's a stark reminder of the fragility of even the most sophisticated systems. American Airlines Flight 5342, a Bombardier CRJ-701, collided with an Army Black Hawk helicopter during its final approach on Wednesday night.
This happened in one of the most heavily monitored airspaces in the world, just a few miles from the White House, which makes it all the more unsettling. The Associated Press mentioned multiple fatalities, and search and rescue efforts are still ongoing.
And the fact that this happened in such a controlled airspace immediately raises questions about the cause. We'll need to wait for the investigation to unfold, but it's a situation that will undoubtedly have implications for air safety regulations moving forward.
It's chilling, especially considering the echoes of the 1982 Air Florida crash, which also tragically occurred in the Potomac River. Now, beyond the human cost, this crash will likely have financial repercussions.
Indeed. American Airlines, trading under AAL, and Bombardier, symbol BBDB, will likely see some immediate market reactions. It's too early to say what the long-term impact will be, but this is definitely a story we'll be following closely as details emerge.
Now, shifting gears to the world of tech and AI, things are getting shaken up by a Chinese startup called DeepSeek, as MarketWatch reports. They claim to have developed an AI model that rivals OpenAI's ChatGPT in functionality, but at a fraction of the cost and with significantly higher efficiency.
This news has sent shockwaves through the U.S. stock market, triggering a massive $1 trillion sell-off on Monday. Investors are spooked, worried that U.S. companies might have overspent on AI development, potentially leading to inflated valuations.
NVIDIA, the leading AI chip maker, symbol NVDA, took a particularly hard hit with its shares plummeting almost 17% on Monday. But here's where things get really interesting, and MarketWatch really digs into this angle: the impact on Bitcoin miners.
It's a fascinating ripple effect. Companies like Core Scientific, CORZ, Hut 8 Corp, and BitVigital, BTVT, had pivoted to supporting AI after the crypto market cooled down. Now, with DeepSeek potentially disrupting the AI landscape, their strategic shift is suddenly facing new uncertainties. Even Iron Ltd. IRN, which had less exposure to AI, saw its stock price dip.
So, is this massive sell-off an overreaction? Or is DeepSeek a legitimate threat to U.S. dominance in AI? I'm curious to hear your take on this.
That's the million-dollar question, isn't it? MarketWatch quotes analysts at Piper Sandler who believed the sell-off was an overreaction. They argue that DeepSeek's low training costs won't significantly impact the short-term demand for AI-powered data centers. In fact, they suggest that this increased attention on DeepSeek might actually fuel a sort of arms race among U.S. AI companies, driving demand even higher.
So, we could be looking at a potential Jevons paradox situation. Increased efficiency actually leads to more demand, not less.
Precisely. It's not just theoretical either. Microsoft CEO Satya Nadella even posted about this on X, echoing that sentiment. And if we look at the actions of Microsoft and MSFT and Meta, they're still pouring billions into AI development, seemingly undeterred by DeepSeek's emergence.
That's reassuring, at least for now. But DeepSeek definitely serves as a wake-up call, a reminder that the tech landscape can shift dramatically, and assumptions about U.S. dominance can be challenged overnight. And speaking of navigating uncertain waters, let's turn our attention to the Federal Reserve's latest decision on interest rates. Bloomberg has an excellent coverage of this.
The Fed decided to hold interest rates steady,
That's
reported by Bloomberg, citing a strong economy and a desire to see more progress on taming inflation. Fed Chair Powell's comments, also highlighted in the Bloomberg piece, emphasized that the Fed is in wait-and-see mode, particularly regarding the impact of President Trump's economic policies.
Which, let's face it, adds another layer of complexity and uncertainty to an already volatile situation.
Absolutely. And on the other side of the Atlantic, we have the European Central Bank, which is expected to cut interest rates to 2.75% to try to stimulate their sluggish economy. This information was covered by both MarketWatch and Bloomberg.
Yes. We're seeing a divergence in monetary policy between the U.S. and Europe. What implications might this have on the global economic outlook?
That's exactly what we're seeing. Two major economic powerhouses taking different paths. The U.S. economy seems to be holding strong, at least for now, while Europe is struggling to gain momentum. And this divergence is likely to continue, at least in the short term, as we all wait to see how President Trump's trade policies ultimately play out on the global stage.
All right, let's shift gears again and look at some other noteworthy financial headlines, starting with Deutsche Bank. DBK.
Despite reporting strong earnings, Deutsche Bank raised its cost guidance for 2025, a move that disappointed investors and sent their stock price tumbling.
MarketWatch did a fantastic analysis of this, pointing out that the bank's success, particularly in its investment banking division, is actually contributing to its cost problem due to higher compensation expenses. It's a classic case of being a victim of its own success.
Indeed. And on a similar note, Dow Inc., DOW, announced 1,500 job cuts as part of a $1 billion cost reduction program. MarketWatch covered this as well, including a statement from Jim Fitterling, Dow's CEO, who acknowledged that these are tough decisions, but necessary as the company navigates the slower-than-expected economic recovery.
It's a sobering reminder that even amidst signs of economic strength, some companies are still facing headwinds.
Yeah.
But now, for a bit of good news, let's talk about the Novo Nordisk Foundation's record-breaking philanthropic donation. Bloomberg reported that they gave out a whopping $1.4 billion in grants last year.
That's an extraordinary act of generosity. It speaks volumes about their commitment to making a positive impact on the world. And it's worth noting that this donation comes at a time when the obesity drug market, a key area for Novo Nordisk's NVO, is experiencing tremendous growth.
No, we're seeing a wonderful example of business success fueling philanthropic giving, which, in turn, can drive innovation and create new opportunities for good. Now, let's turn our attention to the oil markets.
CNBC reports that oil prices dipped for a second day in a row, influenced by rising U.S. crude stockpiles and the looming uncertainty surrounding President Trump's tariff threats on Canada and Mexico, the two largest suppliers of crude to the United States.
It seems President Trump's policies are casting a long shadow over the energy sector, creating nervousness and volatility.
It's understandable. Investors are trying to anticipate what will happen after February 1st when these trade restrictions are supposed to be unveiled. The outcome could have significant ripple effects, not just on oil prices, but also on the global economy as a whole.
Speaking of delicate situations, we've got some high-stakes drama unfolding in the world of billionaire investors, courtesy of the Wall Street Journal.
Ah, yes. The Soho House saga. Billionaire investor Dan Loeb is challenging a bid to take Soho House, SHCO, private, arguing that it undervalues the company. This bid, backed by another billionaire, Ron Burkle, has ignited a debate about the true value of luxury hospitality and the evolving dynamics of exclusivity in today's world.
It's fascinating how this battle is playing out. Loeb is essentially arguing that Burkle's bid, often referred to as a sweetheart deal, doesn't benefit all shareholders equally. He believes it's an attempt to buy the company at a bargain price. It'll be interesting to see how this unfolds.
It will indeed. And beyond the financial aspects, this situation offers a glimpse into the power dynamics at play, not just in the luxury market, but in the broader business world as a whole.
Okay, before we wrap up this first round of headlines, let's touch on one last piece of news: gold. CNBC reports that gold prices are rising, fueled by concerns about President Trump's potential tariffs.
That's interesting, isn't it? Even though gold, a reserve asset, is unlikely to be directly targeted by tariffs, investors are moving gold to the U.S. as a safe haven asset. Bloomberg reports that Swiss gold exports to the U.S. surged 11-fold in December, highlighting these anxieties.
It seems like any whiff of uncertainty sends investors running for the perceived safety of gold, no matter what the specific circumstances may be.
It's a classic flight to safety. When the waters get choppy, investors instinctively seek the comfort of assets that have historically held their value during turbulent times. It really does highlight how interconnected the global financial system is. Events happening in one sector, or even in one country, can send ripples throughout the entire market.
It's a complex web. And understanding the news isn't just about knowing the individual facts of each story. It's about recognizing the patterns, the connections, and the underlying currents that drive these events.
Exactly. And that's where critical thinking becomes so important. We need to ask ourselves, what are the motivations behind these actions? How are different players reacting? What are the potential consequences, both intended and unintended?
It's about developing a framework for understanding, not just memorizing a list of headlines. So let's apply that lens to some of the stories we've discussed. What particularly stood out to you in the coverage of the plane crash?
The parallels to the 1982 Air Florida crash highlighted in the Associated Press article, were especially striking. Both involved planes going down the Potomac River during landing approaches, which raises questions about the unique challenges of operating in that airspace.
It's a sobering thought. Reagan National Airport is situated in a very demanding environment. You've got the proximity to restricted airspace, the constant flow of air traffic, and the iconic landmarks surrounding it.
All of those factors combine to create a high-pressure situation for both pilots and air traffic controllers. While we don't yet know the cause of this crash, it's clear that the investigation will need to take all of these factors into account.
And there will undoubtedly be intense scrutiny on air safety protocols. Everyone will be looking to see if any changes need to be made to prevent similar tragedies in the future.
Absolutely. The airline industry and regulatory bodies will be watching this investigation very closely. Now, shifting gears back to the world of tech, I'm still processing the potential ramifications of DeepSeek's entry into the AI landscape. From your expert perspective, is this a genuine game changer, or are we witnessing a temporary market overreaction?
It's hard to say for sure at this point, but DeepSeek's claims, if true, certainly challenge the prevailing assumptions about what it takes to develop advanced AI. The idea that you can achieve comparable results to the industry giants, but with significantly fewer resources, is a real shakeup.
And that's precisely what spooked the market. Investors suddenly realized that the valuations of companies like NVIDIA might be based on a premise that's about to become obsolete.
But then we have analysts, like those quoted in MarketWatch, arguing that the sell-off was an overreaction. They point to the Jevons paradox, suggesting that DeepSeek's efficiency gains could actually increase demand for AI computing power in the long run.
It's an interesting concept to consider. If AI becomes more accessible and affordable, it stands to reason that more companies and organizations will be eager to adopt it. That surge in demand could potentially outpace the efficiency gains, leading to a net increase in the need for AI hardware.
It's almost like DeepSeek has thrown a wrench into the works, accelerating the timeline for AI adoption and forcing everyone to reevaluate their strategies. We're seeing this play out in real time with companies like Microsoft and Meta, who are continuing to invest heavily in AI despite DeepSeek's emergence.
It's a high-stakes race to the top.
Right.
And it will be fascinating to see how this all unfolds in the coming months and years now. Pivoting to the actions of central banks, we see the Fed holding steady while the ECB is cutting rates. It seems they have contrasting views on the global economic outlook.
You're right. It seems the U.S. economy, at least for now, is weathering the geopolitical and inflationary storms relatively well, giving the Fed the leeway to adopt a wait-and-see approach.
Yeah, precisely. They have the luxury of being patient, monitoring the impacts of various factors, including President Trump's policies, before making any further adjustments to interest rates. The ECB, however, is facing a more precarious situation.
With sluggish growth, persistent inflation concerns, and a complex political landscape in the Eurozone, they've decided to act now by cutting rates.
It's a delicate balancing act. They're trying to stimulate growth without exacerbating inflation, a challenge made even more difficult by the ongoing conflict in Ukraine and the uncertainty surrounding energy supplies.
Before we move on, I'd like to circle back to a couple of stories that resonated with me. Firstly, the incredible generosity displayed by the Novo Nordisk Foundation with their record-breaking philanthropic donation.
It's truly inspiring to see a company channeling its success into initiatives that benefit society. It speaks volumes about their values and their commitment to making a positive impact.
And it's worth noting, as highlighted in Bloomberg's report, that this donation comes at a time when Novo Nordisk is experiencing significant growth in the obesity drug market, one of their key areas. It's a beautiful example of how business success can fuel philanthropic endeavors, which in turn can foster innovation and create new opportunities.
It demonstrates the potential for a virtuous cycle where business and philanthropy work hand in hand to drive positive change. Now, I found the Soho House saga, covered by the Wall Street Journal, to be particularly intriguing.
It offers a peek behind the curtain of the world of billionaire investors and the battle for control of prestigious brands. It's fascinating to see how Dan Loeb is challenging Ron Burkle's bid to take Soho House private, arguing that it undervalues the company and represents what he calls a sweetheart deal that benefits Burkle at the expense of other shareholders.
It raises questions about fairness and transparency in high-stakes business deals, particularly when we're talking about figures with this level of wealth and influence. It also sheds light on the evolving concept of exclusivity in today's world.
Soho House has built its brand on providing a sense of belonging to a select group, and this battle highlights the value that exclusivity holds. even in the digital age. It's like we're witnessing a real-time social experiment unfold.
Indeed. It will be interesting to see how this tug of war between these two titans of finance ultimately resolves itself. Now, lastly, I want to touch on the gold market.
It's remarkable how sensitive gold prices are to geopolitical events and shifts in investor sentiment. CNBC's report on the rise in gold prices due to anxieties surrounding President Trump's potential tariffs is a case in point.
It's a classic example of a flight to safety.
Mm-hmm.
Even though gold, being a reserve asset, is unlikely to be directly affected by these tariffs, investors are flocking to it as a hedge against the broader uncertainty that these tariffs represent.
Bloomberg's data on the surge in Swiss gold exports to the U.S. really underscores this sentiment. It seems that when the world feels shaky, investors find comfort in the historical stability of gold.
It's a reminder that in times of turbulence, perceived safety and stability can become the most valuable assets of all.
It feels like we're living in an era defined by volatility and uncertainty.
There's no doubt about it. And for anyone trying to make sense of it all, it can be overwhelming. So what's the key takeaway here? What can we glean from these interconnected stories?
I'm curious to hear your perspective on this. What advice would you give to our listeners who are trying to navigate this complex financial landscape?
I think the most important thing is to be adaptable. The world is changing at an unprecedented pace, and clinging to old rules or outdated assumptions is a recipe for disaster.
We can't just rely on past trends to predict the future.
Exactly. We need to be receptive to new information, willing to question our long-held beliefs, and prepared to adjust our strategies as needed. That applies whether you're an investor, a business leader, or simply trying to manage your personal finances.
That sounds like sage advice for anyone trying to navigate this turbulent world.
It's not just about reacting to events as they unfold, though. It's about anticipating potential shifts, identifying emerging trends, and positioning ourselves to thrive amidst uncertainty.
Being proactive rather than reactive. That's a powerful concept. So as we wrap up this deep dive into the financial news, I want to leave our listeners with a final thought-provoking question to ponder. With all this uncertainty swirling around, the potential for trade wars, the rapid advancements in AI, the diverging paths of the U.S. and European economies, what steps will you take to chart your course through these turbulent financial waters?
It's a question worth careful consideration. Will you seek stability in traditional safe havens like gold? Will you embrace the potential of disruptive technologies like AI? Or will you forge a different path altogether? The choice ultimately rests with each individual.
That's the beauty of it, isn't it? We have agency. We can make choices, adapt, and shape our own financial destinies.
Precisely. The future is not predetermined. It's a canvas waiting for us to paint our own visions upon it.
Well said. We'll see you all tomorrow morning with new headlines from major financial magazines. Until then, stay informed, stay engaged, and stay ahead of the curve.